We have some regulatory and tax updates coming from crypto.com. Let's cover them. Bank of England drafts a crypto regulatory framework. EU committee to vote on rules against anonymous crypto transactions. And India passes a bill setting a CGT of 30% on crypto transactions. We knew that was coming. I guess it's official now. Here's the key takeaways. On Thursday, the Bank of England began sketching the country's first regulatory framework for cryptocurrency and digital assets, citing that the rapid growth of space may lead to instability of the UK financial system without appropriate regulation. The EU's Econ Committee will soon vote on a new proposed regulation that could ban anonymous crypto transactions. The proposal targets unhosted wallets such as MetaMask, Ledger, and Trezor. If you're in the UK right now, you need to be writing all of your representatives. I really don't know how the government functions. I'm not going to pretend that I do. But if you have a way to contact any officials within the government, you should be contacting them and advocating for these, at least these wallets. It looks like you're going to lose a lot of financial autonomy here, potentially. So I'd be very, very, very adamant about making sure that you communicate that you don't support that. A new proposal published by the U.S. Treasury suggests that cryptocurrencies such as Bitcoin and Ethereum should be added to the IRS's rules for reporting taxpayers' offshore accounts. It's not enough that they're going to go ahead and take everything that you have currently within the borders, but they're going to want to go ahead and grab your offshore accounts too in the U.S. The U.S.'s approach has been interesting because they're basically trying to make sure that they can track and basically tax everything possible surrounding cryptocurrency. At least at this point, for the most part in the US, you're not seeing huge blocks like you're seeing in the EU being proposed. It's just a different approach. You can have your opinion on tax rates and all of that. And obviously, I think that there are some that become exorbitant, like in the case of India here, which on Friday, the Indian Parliament passed a controversial tax proposal under which the citizens shall pay a 30% capital gains tax on crypto transactions starting on April Fool's Day. What a good time to have that policy go through right on April Fool's Day, you fools. So there you go. That's insane, though. You do have a map here that they track. It's super nice. You can check out down below. That kind of covers on an international stage the regulatory stance on crypto. So you can kind of go through here and see essentially what countries support what. And if it's like the dark blue, it's regulated, launched, and approved. If it's the light blue, it's under development or consideration or planned. And then, of course, you have the gray, which is the initial. What's interesting is if you look at the United States, I believe you have under development, consideration, and plan for the CBDC. And what you'll notice across the board is that even the countries that don't have a lot of research in the rest of this regulatory, like outside of cryptocurrency, they're still focused, like for example in China, on CBDCs. Every single country at this point is either in the phase of under development or consideration for a CBDC or regulated and launched already. This is definitely worrisome, and you should be paying attention and share these regulatory kind of pages and information with everybody that you know, and explain the differences between CBDCs. Because people are going to get, the fact of the matter is a lot of people don't have time to research this or even watch channels like mine when in regards to this. So they may not understand that a central bank digital currency goes in the complete opposite direction of what cryptocurrency was developed for fundamentally, especially if we're talking about Bitcoin specifically. They won't understand that it further centralizes your financial systems within any given country, and basically has the threat of, like we saw from Senator Ted Cruz, which not to harp on it too much, but he is correct when he says that essentially that it can be used as a financial surveillance tool by the federal government. That is an invasion of your privacy and definitely, is against financial autonomy. So I don't support it. You should be basically making sure you explain the differences to people if it's brought up too. Because a lot of people are just going to see it as the adoption of cryptocurrency by governments, but that's really not exactly, it's more nuanced than that, right? I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.